Over the past 5 years, I've learned the do's and don'ts of scalping and what you need to do to be able to capture larger swings and trades just like this one, to where you can start with a small account and slowly grow it just like I've done. And soon you will be finding trades just like this one, where I am up over $4,000 in one trade that has been going for 10 minutes. This is something that took me a long time to get better and better at, but just like you, I started from just knowing basically nothing about trading, and then I was able to learn how to do this and consistently do it every day over the long term. Now, the first thing that I really want to nail into your head that took forever and I lost a lot of money trying to do was, you do not need to take really small trades and a lot of them. Scalping does not have to mean you are entering in right here and getting out for a profit right here. This trade right here, I got in right up here at the top of this swing, and then I'm catching this whole swing down. And that is still a scalp because it's on a 1 minute time frame and it's very fast paced. But as you can see, with sizing, you are still able to capture a massive move just like this one. Zooming back, I actually find it better to go for larger swings than smaller swings, because if you're trying to capture all these little moves, it just makes it feel like you have to get a lot of trades to actually make money. And in this sense, with this trade, I got in on one specific area right here and then was able to make a profit. And that's where timing is really, really important when it comes into trading, is patiently waiting for the right setup to happen. And so what was really crucial about this specific setup here and timing is at 9:30 is when the S&P 500 futures and the NASDAQ futures open. And right here, I'm trading the NASDAQ futures, and I saw a pattern where it was pretty clear that the thing was in a consistent uptrend. And then all of a sudden you can see it start to have some failure in here. And then the timing was waiting for that market to open and getting in right as this candlestick opened. Essentially, the market went up here and then broke lower, and it broke below this previous low. And then from there, I could see that it was very likely for the market to have a big sell-off here. And so that's where you can jump in with kind of a scalp in mind. But because you're focused on the timing and patiently waiting for the correct thing to show up, you're able to go for something where more like a really favorable risk reward, where I'm risking, let's say $800 here, and I can on average get maybe, $2,000 or $3,000. And that's a much better profitable way to focus on scalping. And so a big key into reading that I find really powerful is looking at the micro trends, and the trends of essentially what we can see on the screen right here is this micro trend of the market continuously going up is actually a really good signal, and something I've noticed over time that shows a lot of potential. If this trend breaks and you see a couple of other factors here, there's a high chance of it selling off. And that's really important for when you're looking for these timing areas to get in on a trade, because that's what's going to allow you to effectively scalp these larger trades that happen on still a smaller time frame. And so what I see about this trend that makes it powerful is that it's just a slow, methodical move up, and then it breaks here. It's very easy and obvious that it's broken, and there's not many big pullbacks in the sense of like this, because it makes it so, okay, well, if there's a big pullback right here, it might continue going up. But this is just so methodical in how it moves up that when it breaks and has a nice consolidation like this, and then you see some big bearish bars here, that's sellers coming in showing you that, yeah, it's more likely it's going to start getting momentum to the downside. The buyers essentially are drying up. That's what these kind of dojis and sideways movement show. And then from there, you look kind of into reading the candlesticks. And so what I kind of see reading into these candlesticks is that if I kind of draw this section out here, is it sold off, sat there for a couple candlesticks, made a big bullish candlestick, attempted to go higher, and then it sat there for a candlestick with that doji, and then it had a sell-off, kind of showing you that, hey, this move right here isn't actually strong. If it was strong, it would have kept going up potentially and made new highs up here, but it didn't do that. Instead, it got rejected by this big candlestick, essentially giving back this whole move up, which on a micro scale and kind of reading into the candlesticks on a smaller time frame, this is what it would show. It would show that big move up was actually reversed, and then it sat here for a couple of candlesticks again, kind of showing you indecision. And then this big candlestick, this was the real money candlestick here, where in that one candlestick, it went up. Based on this wick, you can see it opened here, went up, but then based on how it closed, and I was actually watching this in real time, is it went up and then immediately sold off. And for me, I put in my sell stop order that essentially once that price is hit right here, I put in an order and I get in short, and then the market sold off from there. And the candlestick closed all the way down here. And in my recording, if I zoom all the way back, I wasn't able to record that because it happened so fast right at the market open, but that's what happened. And then from there, you manage to trade how you see fit. And the biggest thing though, that makes this possible is actually reading into the bigger picture. And so because this is on a 1 minute chart, now let's go to a 5 minute chart of that same chart. This is the NASDAQ now on a 5 minute. And what we're looking at is where I jumped in the trade was essentially right here, kind of at that market open. But now we can see a couple days back, right? And so the big picture, and this is really important when you're looking to trade too, is taking into account the overall trend. At whatever market you're trading, what is the overall movement of what it's doing? If it's in a big downtrend, you're not going to be wanting to trying to buy and bet the market's going to go up because, well, it's more likely that anytime you have a support level, it's likely to fail, right? But now it was in a downtrend, but now it's going into a more of a sideways trend over the last day or two. And overnight, this is the overnight action. It's shown that it's gone a little more sideways. And so zooming into this, what I thought was really important to look at here was, well, it's starting to go into a sideways trend. And so what often a big pattern that I see play out and something to pay attention to, actually zooming out again, is if you look at this, it's something called a bull or bear flag. Essentially think of it like a flag. It's an upside down flag if it's a bear flag. But the idea is the market's going down in a downtrend. It sits here and consolidates for a little while, and then it has potential to keep going lower. Overall, the trend was down. It makes it more likely that we can continue down. And then looking as well at these overnight levels is where you can see right here, this was a previous high of overnight. And so when we have that methodical trend that we were looking at, this is exactly, this trend right here is this trend right here. It's that methodical move up into this resistance level. And so that's what I drew this resistance level off of right here, is just this previous high. I was thinking, this is a really nice trend based on that kind of micro pattern. And then looking at this previous high, that is a really good spot to say, hey, the market had a very strong sell-off here before. It's likely that it potentially does it again. Now, of course, you don't know. It could just break through here. But if the factors align, I'm going to look for a short there and bet the market's going to go lower. And if you think about it, well, it's got some swings down here that make a support level that say, okay, well, if this is going to get going here, there's a lot of room to make a good profit. And that's what I like to see when you're analyzing the trends in the markets. Think about the amount of money you can make on a trade. Not all trades are made the same. This trade right here, if I pull up a simple risk reward calculator, based on kind of where I got in, if we look at this, if the idea is I'm going to jump in here as a short, I'll put my stop loss somewhere up here to protect me in case I'm wrong, because you always want to have a fixed stop loss. You don't want to try and give it more wiggle room. You want to cut your losses when you're wrong. Because the idea is, and I found, this is another tip, that the best trades are easy, they work out really well, and the bad ones just are a lot of work and they struggle, they chop around, they come up against you, they try and fake you back lower, and just get out of the trade at that point. It's never worth it from what I've seen. And to just kind of bring this in the screen a little bit more so you can see it. But so if you get in somewhere here, and this is for me, I risk about $800 per trade. This is just a quick tool I have that easily calculates it for me. But then you can see if I go 3 times my risk, all the way down here, 4 times, 5 times, 7 times, kind of where this support level is, where I would expect this trend to go before it finds a bounce, you can see you're making $4,000 or $5,000 on the trade. Or, whatever size you're making 6 or 7 times your risk. And that is a good trade where you want to be jumping in. And so, just quickly kind of zoom forwards on this, because we did kind of already see the trade. This is kind of what happened on a 5 minute, is it did move down there before it started to find a bounce. And so that's kind of what I'm looking for with these spots, is to capture kind of swings like this. And now, of course, these don't happen all the time. That's why you want to be waiting and using that timing to your advantage, because it'll allow you to get these really good trades where, like in this one where you're making a ton of money easily. That's what you want in trading. The hard part is sitting on the sidelines when these don't show up. And so a big thing with these is focusing on, at least for me with reversals, because that's mainly what I look for, is looking at the key swings. You know, looking at this range, it's very clear these are the extremes and these are where it's more likely to find some kind of bounce. Those are ones you want to pay attention to. Don't start looking at, you know, this swing, there's kind of these bottoms right here, this bottom right here. You know, I think this kind of came up here and kept going lower. You know, don't look at this swing, because just the same thing with over trading of trying to get little scalps all over the place and trying to capture, you know, all the random swings. That's the same idea with not going and looking at all these other little resistance and support levels. Sticking to the extremes is going to allow you to kind of capture and the big picture of the market. I actually have a whole video on how I draw these support and resistance levels that I'll link in the card just up here. And the next biggest thing to think about though is you have to journal the trades. You have to figure out what is working and what isn't. You know, trading is a lot of work and takes effort. You have to go in and journal, okay, how much did I make on this trade? What worked, what didn't? Why did I get in? And then, you know, what were the key factors of what I was seeing? Like, there's this good micro trend, the movement up here. You got to start tracking it, and also track your emotions, because that will really help with setting you up for success in the future. Trading is all about going into every day with the idea that trading is never the same. The markets, you know, this trade worked out great, but I will never have a trade that looks exactly like it again. You know, these always show up slightly different. And so in the link in the description, I will put a guide that gives you the best, I think kind of the 3 best options for trading journals. Some are, you know, will just do it for you, and others, you know, are a little more involved. And so highly recommend journaling your trades once you have a strategy, because that is how you find the loopholes of what is working for you and what isn't. What ended up really working for me though was sticking to one specific strategy. And I want to walk you through that right now, because really what damages you the most as a trader and gets you stuck in what I call a learning loop, and I was stuck in it for years, is that you jump from strategy to strategy. You have to eventually land on one that works for you, because jumping from strategy to strategy or trying to add multiple indicators here and there just does not work. You have to stick to a specific strategy. And this is one that I eventually landed on. It got me out of that learning loop, and I was able to become consistently profitable after years of just struggling. And so this is the exact same kind of setup that we were just looking at, but it's on the flip side now. And it's the same thing that I look at every day. And so it's one, looking for either a support level or resistance level. This is a support level in this trade. And again, go check out that video I mentioned about drawing support and resistance levels. That's will really help you in how I find these. All it is, it's that timing, right? That patience, waiting for now this market, and I'm trading the S&P 500 here, to come down into this level. You can see I have a trend line here. Wait for essentially this trend, this methodical trend it's in. Now, it's not as crisp as the last one, so I'm not as confident in this trade now, but it's still really strong. And so what I'm looking for is, I just want to see, okay, I want to see this trend break. I want to see it start to go sideways, lose that downwards momentum, because again, you don't want to just blindly be buying, hoping that it's going to reverse. You want to see signals that are telling you that it's going to reverse, right? And so from there, kind of the next thing in my setup is, once it's broken that trend, that's step 2, I want to see it make some kind of attempt to keep going lower. I want to see it exhaust. This is kind of something that really keys me into saying, okay, this is actually really way more likely to reverse, and this is kind of, it'll catapult it in the other direction. So that's what I'm seeing right here for that, is kind of these 2 bearish candlesticks. Is the market really fast paced in these 2 candlesticks, tries to keep going lower. And you can see we essentially have a double bottom here, and it breaks out. The price here breaks out briefly, very, very tiny amount. But this big candlestick pushes it below, makes a new low, but it's barely making a new low. What I do is I call this a failed breakout when it makes a new low by just a little bit, and then the failure comes in when this candlestick right here, when this bullish candlestick happens. Now I'll zoom back in the recording here so you can see this. When I entered in right here once this candlestick formed. I put essentially a stop market order above this saying, hey, if it breaks above the high of this candlestick, I want to jump in on a trade, and I'm going to put my stop loss below this failed breakout because I think I like to go with the structure of the market. And so I think that's a good place for a stop loss, because if the stop loss is below here, you know, it's more likely that if the market breaks below that, well, I think it'll keep continuing lower. I'm wrong on my idea, and I just want to move on to a better spot. Again, it's about that patience and waiting for these good spots. Another thing too to pay attention to is that risk reward, right? Is I want to make sure that I can risk a small amount here to capture a larger amount of profit. That's a positive risk reward, and that's going to help us become more consistently profitable in the long run. And so let me just kind of zoom this forward here, because now once you're in the trade, you got to manage it properly. A big issue I see a lot of people when they're scalping is they will jump out of a trade too early because they're scared for a few reasons. And the first one of those is moving up to break even too early. When you start to get a little bit of profit, when it starts to go in your favor just a little bit, you had all this fear of jumping in on a trade, losing this initial money, and you move up to break even too quickly. And what you have to realize is, especially for these kind of trades, when the market comes down here, it's going to have some sideways chop here for a while, potentially, before it shifts higher. And so what you have to do is you have to give it that wiggle room, that time. You don't know when it's gonna kind of break out of this area because you don't necessarily get in perfectly on the right time, right? And so actually what happened there was I added on 2 more contracts because I liked the fact that the market came down here again and had another bullish candlestick. I thought that was a good signal that it increased the likelihood to jump in or to go higher. And so I actually scaled in. I doubled down on this trade. I initially jumped in on a smaller size because I was a little worried about kind of potential chop and it didn't seem as strong of a move. And so I went in on half size. That's something you can do as well, is go smaller size when you're not as confident. And then when you get that confidence, if it's still in a good spot to jump in on a trade, you can add on. This is something a little more advanced, but it is something to definitely pay attention to. Another fearful thing that hits people is once it starts to go in their favor, they'll get out too early. Just try and let the market play out and do what it's gonna do, because you spend a lot of time waiting for the perfect spot to jump in. And in this case, these are always inflection points, right? The market's come down here, it's broken this trend. Either it's gonna go up and you can potentially capture a lot of money, or it's gonna go down. That's why we have our stop loss, right? You'll cut out and not lose that much money. And then on the flip side though, you can profit a lot. And so that's why you got to kind of let these things play out. And so for me, of course, I've got better and better at this over time. This is something that you will get better at over time, but you have to put rules in place. What you need to do is have a management plan that you follow every time you jump into a trade. That, okay, I only go break even when the price, clearly breaks out in the direction and it's gone 1 or 1.5 times my risk in the profit area. And then I also wait and slowly trail it up only once it starts to put in a clean, methodical trend of structure that I can move with. I don't find it worthwhile to move up randomly at certain areas because you want to let things wait. And so what happened right here, this kind of moved up. I had a little horizontal line here because that's when news was happening. And so I was okay holding into news. I normally don't hold into news, but because my trade was already at break even, I thought that it was okay to hold into news because, again, I won't lose anything if it goes against me, but news can sometimes be a catalyst and punch the market higher. And so again, thinking about the risk reward, the math behind trading of I'm not risking much here if it goes against me, but if this news is really positive, I could get 3, 4, 5 times my risk if this really starts to accelerate in my favor. And so that's another thing to think about when you're trading, is managing that risk as well. And so just to kind of, again, keep zooming this forwards, you can see once it kind of had this bounce here from the news, that's where I kind of moved up with a swing. And then as well, as it continues forwards, we have this uptrend line. I'll kind of move with the swings as it goes up there. And then from there, I'm looking to slowly start to scale out of the trade now as it starts to become more and more profitable in my favor. And so this is where the wiggle room and giving the trade time to play out is really powerful, because you don't know how it's going to play out. And so here it started to punch up, looks like it was going to keep going higher, and it knocks me out there for still a nice $1,000 profit on that trade. And that's a really nice way to close out the day. And so if you want to learn how you can start with this strategy, scale up from a small account risking $20 to $50 at a time, just like I did, and now to where I am now making thousands of dollars in one trade, check out this video right here. I will lay out a whole plan for you.